You're welcome back. It's still Business Morning on Channels Television and Bolaji Akiwale. And we're looking at the capital market performance for the first half of the year. And our guest has been Dagogo Iyeimo. He is the CEO at Milestone Capital Mgt Limited. Thank you, Dagogo.
Thank you.
For sticking around.
Yeah.
I would like us to move into the regulatory space, the regulatory framework of the capital markets. When you look at what's happened from the SEC to the NSE authorities, what would you say about it?
Well, what I'll say is that all participants have learned very well. We're still learning. Operators, the regulators, the SEC, as well as the NSE. We're all learning. We have seen the lapses over the years, and everybody is working very hard to correct these lapses. And that's why we see a lot of regulatory action coming from the SEC as well as the NSE. We've seen that the rules are now being dusted up. They are being reviewed very frequently. New rules are being introduced. The rules that will change the older rules, as well as the rules that will transit the market to the next level. So yeah, we see a lot of regulatory action, new initiatives coming in, and to support technology, to support the new risk we all face in the market, and the expansion we expect in the market as well. So yeah, a lot of action in that regard. And don't forget, the regulators are also taking a very strong stance with regards to infractions in the market and ensuring that corporate behavior, whether as a broker-dealer or as a quoted and listed company, yeah, so we see quite a lot of action in that regard. It's and then it's going to help the market. No doubt, we're beginning to see some of these fruits in the as the kind of stability we've seen in the market, even as headwinds come back and forth. We still see that the market is able to absorb these, and then these are all part of the initiatives that have helped instill some additional level of confidence. And like I say, it's because we have learned, and we're still learning, and we're learning. I think we're learning well. All
right. You mentioned lapses, and I was just curious, what are those lapses that the authorities had to work on that in the first half of the year?
Yeah, quite a good number of them are behavioral. You needed to instill a reasonable level of discipline in operators. Before now, operators, you could just have people, some people got qualified without the right kind of attitude, and you just get into the business and throw away the professionalism that is required for it. At the other end, you saw quoted companies also not giving all the kind of disclosures that you would expect to power a 21st century market. So we've seen rules to ensure standard corporate behavior, disclosure rules. There's been the transition to IFRS. That is a whole world of disclosure for listed companies. So in various ways, these initiatives have kicked in, and people are behaving a lot better. People are looking at professionalism and discipline, and I think the market is the better for it.
Okay, capital market operators, which I know you're one of them,
yes,
said to have attributed the decline in the market to the central bank's tight monetary stance. Do you also think so?
Well, yes, you would say the tight monetary stance is affected the market, because it's not just the capital market, it's affected the marketplace entirely. I mean, the banking system is also that's one of the reasons why its activities have been muted. But you want to ask, does the central bank have many more other alternatives? Not really. If you get into it, you see that this tightening will have to continue. Because you're targeting inflation, you want to ensure that inflation is well under control, which is what it's done. Which for the CBN, price stability is critical. That's the first thing they are targeting. They want to achieve. They're not targeting growth and expansion. Indeed, they want to control growth and expansion. So if you need to look at it from that perspective, and then you need to key in. So operators and the market should understand that this is the policy perspective, and so you need to build strategy around it.
Okay.
Yes.
Now, but do you think that it's good news to hear that further tightening, as you rightly said, may impact on the market negatively until after the elections, because the central bank governor was saying that perhaps there'll be no easing of monetary policy stance until after the elections. Between now and then, how would you think the market should prepare itself or would react to this development?
Well, the market has already absorbed some of these. The market is very forward-looking, and the market, I can tell you, is already incorporated these anticipations into its valuations and pricing. We still think that the economic space will be significantly restrictive, and so for many participants, it's going to continue to be cautionary until the elections are over and won and lost, and then stability returns. Is a clear direction of policy can now be formulated.
Now, still talking about the central bank and this decision, we all know that the increase in the cash reserve ratio on public sector deposits to 75% from 50% was created some kind of uproar,
yes.
Because a lot of people were of the view that, banks should not have enough money to trade and all that. Did all of this still impact on the market? Absolutely.
Absolutely. I listened to Rotimi talk about what's happened to First Bank in its valuation in the market. I think the First Bank suffered the most in that policy, and that's one of the reasons why it's been, its pricing is been, at that level, compared to its peers. So the market is, was significantly affected by that policy because the banking system is the most active in the market. The banking sector is the most active in the market and accounts for the biggest chunk of liquidity. So when the activity is there, the pricing is because of is muted. You find that we have the market will suffer for it, yes. But how there are structural adjustments that need to take place, corrections that need to happen. If the central bank is saying, listen, banks will need to go back to traditional banking of seeking for projects for to lend and not rely on other income, if you like, from all the many other sources outside traditional lending, then you will understand why some of these policies will have to go in. It's a structural adjustment. It's going to be for a period, and we shouldn't be frightened about it. Really.
And that figure will likely rise to 100%.
Yes.
So if it is at 75% and we're still trying to come to terms with that decision, and the market is trying to get back on its footing, gain some balance. When it gets 100%, what will happen to financial stocks, which rely, so to speak, on the parent company to aid trading in a way?
Yeah, I think the CBN did well in the last meeting to sustain it at 75%. It's useful when you make these policies to step back a bit and see its impact sometimes to be sure that you can manage the impact. You don't want to throw in everything you've got and at the end it spirals out of your control. Okay, so I think it made plenty sense to have retained it at 75% and allow the system adjust significantly to it. And I would think as well that the CBN will still leave it at 75%, yes, and then and allow the system gradually, adjust to that, and over time, changes can still come. Yeah.
Okay, we don't have much time. There were companies that were delisted in the first half of the year, and the NSE was saying that they are not meeting up with the post-listing requirement, expected in the markets. What's your view about this?
Yeah, my view on these, I think I hold a fairly radical view about this in here now, because it shouldn't be enough to just delist a company. I mean, there has to be, if the NSE, I would think, has gone through all the process and has found this company wanting in all regards, and will now publish for delisting or seek delisting, I think that it's not enough. Shouldn't stop there.
You think
the promoters?
Is it a harsh move? Or?
No, it's not that it should be. It may not be harsh, but I think that the promoters, the key promoters, need to be brought in. They need to questions. We need to know whether there's been fraud. We need to know whether there has been mismanagement. Because you can't come to the public, get funds, go back, and then mismanage or misuse it, misappropriate it, and then you do things that will now have the authorities delist you. I mean, that's to your benefit, isn't it? I'm saying that shouldn't be. So we need to get in there. Why are reports not coming? What have the auditors said? Who are the managers? Does
the NSE have the prerogative to look into other areas that may not be within its purview of regulation? Because if the owner of a company did not, or for whatever reason, did not allow the business to thrive in a way, what I think the NSE perhaps we're looking at is you have to meet with the regulation and the rules guiding your market performance. Do you think it can go into other areas besides
where does investor protection come in? Where does investor I mean, every operator is in the market. Every stakeholder is there to do for investor protection. Okay, the SEC, the NSE, operators, we're all there for investor protection. And this is in the square purview of investor protection.
So the SEC should come in at this point?
Yes, absolutely. Why would you ask for returns when you're not going to look into those returns and see if there are gaps and insist that certain things be done? Now, shareholders associations as well as broker-dealer committees should also step in. It shouldn't just stop at the listing. It shouldn't. Key promoters need to be brought in.
No questions need to be asked.
If there is fraud, then it needs to be dealt with. Yes.
All right, Dagogo, quite an interesting conversation with you. Thank you. I'm afraid we have to end this at this point. Thank you for coming on the program. That has been Dagogo Iyeimo. He is the CEO of Milestone Capital Mgt Limited, and we have been looking at the capital market performance for the first half of the year. And of course, a lot of developments actually unfolded. Like we talked about the delisting of some companies, perhaps the SEC at this point should step into this situation and look at those companies in details, look at the underground factors, look at the issues that are still not been brought to the surface and see how these can be addressed. Okay, that's been Business Morning. Thank you very much for watching. We do appreciate your time with us. Coming up next is News Track. I am Bolaji Akinwale.